following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host, David Blain. Sell in May and go away, will that work in 2012? We're going to explore that topic as well as others on today's show. We're glad that you could join us today. The first day of May 2012 as I record this. A lot of our ideas for the show come from you, our viewers and listeners, so we welcome your comments and questions. Our email is allthingsmoney@dlblain.com. Phone number is 252-633-0107. And of course you can find us on the web at www.dlblain.com. So, sell in May and go away. I don't know if you've ever heard that, but on Wall Street it's kind of a mythical saying that has been an effective strategy for quite a number of years. Whether it's an anomaly that has some value or just a random occurrence is quite debatable, but I thought we would address it as we enter May of this year. The Dow was up about 8% for the year or so. Last month was a little bit down, but there's a book out there called the Stock Trader's Almanac, and Jeff Hirsch, the editor-in-chief, compiles a lot of data, and one of the things that is in this Stock Trader's Almanac is the adage that sell in May and go away. And what that basically means is that they went back to they've tested this theory back as far as they could to the 20s, but since about 1960, if you were to sell in May and buy back in the market in October, since 1962, $10,000 would have grown to $620,000 today. If doing the reverse, that is to say, buy into the market every April and sell at the end of October, would have had a slightly negative annual return. And so when you look at the year by year, it seems that between April and October, the market has problems going nowhere, and the majority of the gains are made between October and April. Of course, anyone that has been paying any attention for the past several years or historically knows that October can be a devastating month. So generally this is at the end of October, and realistically buying in the beginning of November through the end of April. Now this saying on Wall Street has worked the past 2 years, but will it work going forward in 2012? You know, nobody knows, and one thing that it doesn't say is sell on May 1st. You know, I don't know. There may be some validity to it based on some of the theories proposed is that on Wall Street, the summertime is traditionally vacation time. Some of the traders go on vacation, position their portfolios for minimal trading and things like that, and so you don't have these run-ups in stock prices. You know, I don't know. It may be just an anomaly. Anyway, we don't recommend selling in May and going away. If you want to keep an eye on it and maybe be aware of this type of anomaly that happens from year to year, well, that's fine, but I would not advocate dumping an entire portfolio just because of some anomaly. In fact, because of the anomaly and because people look for it, two things happen. Number one is it gets exacerbated because people think it's going to happen. So if everybody thinks that that's the theory and everybody goes and sells in May, you know, it's sort of a self-fulfilling prophecy. But what happens with every one of these theories is you have another group of people that are going counter-trend, and this is exactly what happens. And they wait for all the people to sell, and they wait for the markets to go down over the summer, and then they're buyers, and they end up picking up stocks at quite a bargain level. So that's kind of the attitude that we would take to try to time the market based on a calendar month strategy, not really something that we would recommend. There are some other sort of quasi-calendar strategies, such as presidential cycles, that do have some underlying fundamentals to them that typically the third and fourth year of a presidential election, they're trying to dole out the money. They're very free with the money to basically trying to buy votes, and this tends to propel the stock market forward. So here we are in the fourth year of the presidential election cycle, so there are those things going on as well. But just, based on a calendar month of May, we would not sell out just for that. Here's a great story that is near and dear to my heart. In fact, just last night, my wife and I were talking about this, and the title of this is The High Cost of Kids' Sports. I have 5 children, and they all are involved in sports. In fact, last night I was out coaching one of my son's baseball teams, and my daughter plays sports and is involved in different things. And this was just a great article. We were talking the past several weeks about the high cost of education. We talked about the cost of raising children from birth to 18, not including college, right now runs about $250,000 per person for the typical, whatever that may be, middle-class family. And one of the things that drives that cost, in addition to school and daycare and food and clothing and everything, is the cost of these activities. And we're going to focus on sports here today, but the same thing could be said for whatever activity is, whether it be our kids play violin, it could be violin that gets very expensive, or music, or dance, or theater, or anything like that. We're just talking about sports here today, but we see that not only do these sports cost money to register and play and equipment, things like that, but there's the hidden cost of parents carting the kids all over the place. As I mentioned, I'm very involved in the baseball, and you've got kids that play on 3 different baseball teams. They play for their school. Some of the kids starting to play for middle school, high school. They have these travel ball teams where the kids travel all over the place. And then there's what we call the recreational leagues. And so you've got some kids playing on 3 teams at one time. And yeah, they can use the same bat and glove, but the parents driving them all over the place can become very, very expensive. So you've got equipment, uniforms, travel, and then of course the sports or activities that have private lessons get very expensive. And we're going to run down some of the most expensive sports: horse riding, ice hockey, figure skating, gymnastics, lacrosse. These are some of the most expensive sports out there, not only because of the equipment, but due to the fact that a lot of them require these private lessons that really escalates the cost. So we think sports are a good thing, but once again, as a parent, just like college, you don't want to jeopardize your own financial future so that your kid can play, soccer. There are some important lessons to learn from sports, but not enough to jeopardize the financial future of the parent. When we come back, we'll talk some more about these high-cost sports for kids. So for All Things Money, I'm your host, David Blain, and we'll be right back after a few short messages.